On Monday, I said the next 24 to 48 hours were critical in determining what is next in the markets. So I wanted to come online and give you the verdict. What we saw with that announcement on Monday of China was essentially the pain trade executing as the market ripped higher, causing a lot of losses for those that were positioning short on the downside of the market. So what does this mean and what should you expect? So looking at this chart, the S&P 500 put in two back-to-back days, but what was actually key was that they didn't give back the rally that occurred on Monday. Now we're seeing a scenario where we have entered what I call the neutral zone. As a Canadian, I basically love to make hockey analogies. What we want to say is that below that 56, 5700 level on the S&P, the bears were playing offense. Now the puck's in the neutral zone. We've now entered an area where we've entered the trade ranges that were the trade ranges in the prior 6 months to the decline. This has essentially neutralized the sell cycle. Now that doesn't make it bullish. It doesn't mean that there won't be a recession. It doesn't mean that those risks aren't there. But what it does do is stop the negative feedback loop from circling in that causes where selling begets more selling and creates a feedback. We're now seeing a scenario where the market is going to settle in at this higher range. There could be even further short covering on the short term. A double top retest of the previous highs is now a much higher probability than it was last week. And at this moment, expecting the market to crawl higher is possible and even probable. Now, does that mean that investors should buy? Well, only short-term traders should be trading these things to the upside. The way I envision this is that the risk that there was going to now be a May decline has massively declined. In fact, at this moment, the likelihood of a decline in May and June has materially declined. And what we could end up seeing is in this neutral zone that I've defined, if I was to kind of draw it on, we could have a scenario where the market stays up here for right into the summer before putting in a topping formation, and then we would determine probably through the July earnings, maybe the jobs numbers coming out in June, July, other clues as to whether a recession narrative and or a corporate earnings contraction cycle is really underway to beget a bearish downturn. If it doesn't materialize, then that would be a consolidation for a potential bull turn in the second half of the year. A lot has to be revealed, but really it's about what's going to happen in the next month or two. But right now, consider us in the neutral zone.